All right, let's start out and talk about. I guess my thumbnail was the roller coaster just about to the top. Um, we're getting very close on a lot of the all time highs, and I'll start with some of the markets that we normally go through, and then the question of, then what? People have been saying that the markets are, we're going to die out for a long time. Uh, I am Had I not run into the forecast of David Hunter, I would not have expected some of the things, but you know, uh, I do trading on price action, but you know, I'm not trying to forecast too far ahead. Um, but there are some things that I hold just because to me they're good things to hold. And so let's just start into the markets. And I'll talk about the all time highs as we kind of get into it. I kind of cover it off and off in other um, episodes that I've had. Starting with the Dow Jones, around 36,000, 37,000 almost, um, is the all time high. And we stand, at 35.5. So 1,400 points away. And for the Dow Jones, that's not, that's not a long distance travel that could be done in, 5 really good days. I don't expect it to happen that quickly, but, it's a roller coaster, right? Um, and then we look at the S&P, the SPY, and we're inching closer. We had a rough day yesterday, which is a lot of when we go through the economic data, you'll see why. Not necessarily bad data, but after we had just got an increase of 1/4%, people were looking for weakness in the economy, and we're not really seeing it at this point. And so everybody's negative on the fact that the Fed threatens to keep hiking. So the SPY at the all-time high is 480, and we sit at 456.92. Um, on the Qs, which representative of the Nasdaq, we sit at 380, 383.50 ish, and we have to get to 408. Now there's not a lot of barriers between where we sit now and 408. So my expectation is that probably, I can't make any guarantees, but my expectation would be unless we have a bigger correction than we had yesterday, which we recovered most of, I would expect us to be able to hit that in August relatively easily the all-time high. And then we have the IWM. I've got my charts marked up here a little bit, and that's got a little more distance to travel. And we've been talking about the breadth. We kind of had bad a bad day today as far as breadth goes of the percentage of the stocks under the 200 day, and now we sit at 57.5 ish, and we've if this thing is really going to take off, which now is becoming quickly the expectation, at least on my part, I would say that that's the consensus. And again, I'm following the part of David Hunter, trying to get his eyes and the way he thinks about things, because it's unique. Um, and I can see, especially when I go to bigger time frames, how all this is possible, because you get tied down into the daily, the hourly, and to some degree even the weekly sometimes. When we look at a monthly chart, well, looks like we came down here, bottomed out on the monthly. Are we building a higher high, or are we going to? Is that it? As far as the number of stocks above the 200 day. We're here, 91% back in, when we hit our previous highs. We had a lot of participation. So there's some work there to go. But if you look at the candles again, the last couple months, we've started to make our way back up as far as the breadth of the markets go. So some of the other ones I'll cover at the end, but want to take a look at the DXY this week. Kind of meandered its way up. I wouldn't expect it to get up here. The weakness of the dollar is starting to show up. I didn't think it would make it through all these. Maybe this barrier here it could be the area about 102-ish. Might be the area where it starts to turn around. Looks like we had a little bit of a rejection here at the 102. And sorry, I'm trying to whiten this so that you can see where it hits. So it came up there today, went beyond it a little bit, and then rejected back on the dollar. But it's also down, at one point. So we got kind of a doji candle, can't make up its mind. The yield on the 10-year has gone back up. I'm not anticipating hitting this double top we have here. It could, but I'm not expecting it to. I'm expecting it to start to reject. Could it be a triple top? Could be. But my expectation is this thing will start to turn around. Crude oil back up again. We have strong resistance up here, 82 and a third. If it breaks that would be a little surprising to me at this juncture. But people are getting optimistic about the economy, wrongly so, but they're getting optimistic. The VIX, again, down today after it looked like we were going to start to spike up yesterday. But, if you look at the weekly, it was down for the week. We're still down at a low number of 13.34. And then I'll cover some of the rest of these, because then the question becomes, okay, and now what? So I'm going to take at the end of this, I'm going to take some of David Hunter's forecasts of different industries he expects to go, and just kind of see where they stand at this point where that he expects would get a melt up. And there's some that probably I should have added to the list, but this was the original list that he talked about probably middle last year, maybe spring of last year. So that's that. Let's take a look at the economic calendar, starting with last week. We actually a little surprised on the PMI. Most of our activity that we've seen in manufacturing has been not very good. So the fact this went from a consensus of 46.2 and even the previous period up to 49 was kind of a surprise. I've been expecting the services to tick down, but it's really, it's hanging in there. Expectation was 54, came in a little bit stronger than that, or a little weaker than that, of 52.4. But my expectation would be that number continues to go down. Tuesday, we had consumer confidence, came in much more positive on Tuesday. Wednesday, we had the mortgage rate stay the same. New home sales down 2.5% with a forecast of -4. But we had a previous period, we had 6.6 up. But the numbers are lighter. From expectations 0.725 down to under 700,000. The Fed interest rate was probably the most anticipated and probably the least reaction I would have expected. Not the fact that I think everybody's pretty much expecting it was going to go up a quarter of a point. Chairman Powell in his press conference really didn't say anything super negative, other than the possibility of couple more quarter point. Right now, I don't think the expectation is that that will happen, um, but we'll see. Initial jobless claims came in better than expected at 221 after a couple months of being higher, or a couple weeks of it being higher. And uh, pending home sales down 15.6, a little better than the forecast of down 19 year over year, a little bit better in the month over month. Core PCE was, Thursday was one of those days where when the durable goods orders came in at 4.7, there just seemed to be, and then 220 on this, I think just after the Fed had talked about all this, and then there was some things going on with the Bank of Japan, it just really was a weird day. It just was very negative, and it dropped. The markets dropped. All major markets dropped that day, some more than others. The Qs kind of held up all right, and they blasted back today. But when we got to today with the core PCE pretty much being in line, a little bit better. Let's see. Yeah, pretty much in line. 0.2% after 0.1% the previous period, year over year, 3%. Down from 3.8%. Expectation was about 3%. 2.9 probably would have been better, but that's okay. The Michigan consumer sentiment was up from last month, but under the expectations. Chicago, well, all this is the upcoming week. We'll take a look at that real quick. Taking a look at the economic indicators for next week, we have, Dallas manufacturing has been coming in very negative. We have on Tuesday the ISM manufacturing PMI still under 50, so it's contracting. Our expectation is it maybe ticks up a little bit, and we'll see what happens there. JOLTS job openings have kind of disconnected from the non-farm payroll. See how that plays next week. Mortgage rates, maybe a tick up at the moment. We'll see what happens, by Wednesday of next week. And then initial jobless claims, expecting that to tick up as it had for 2 or 3 weeks there. And, ISM services, previously 53.9, expecting that to tick down. Unemployment rate at 3.6%, expecting 200,000 jobs. And this is one that baffles me. And I think that, again, I think what we need is some measure of the quality of jobs that are out there for this to be relevant. Most of the jobs that this makes up, when you look at the breakdown, a lot of service industry jobs, not, even though they brag about all the money they're spending on trying to bring manufacturing back. It's just not good when the government's involved in these things. Oh, we're giving you money, but there's always, there's always a string attached to that money. It reminds me of the commercial, with the guy that has the dollar on the end of a hook, and every time somebody tries to grab it, it's pulled away. I just don't like government involved in that. As far as, all the money that they've got from taxpayers and that time, it's not spread out efficiently. Looking at the investor sentiment, we haven't looked at that for a couple, 2-3 weeks. Still fairly bullish, not as bullish as it was last week, which I didn't cover. We got a little bit more bearish sentiment here. Not, as I said, it's not a great indicator. That's why I've been using the index on the number of puts versus calls on some of the key markets like SPY and Qs and some of those. We're still in an extreme greed, and then if we look at this calculation by Truflation, what inflation's doing, kind of ticked up this week. So it's getting more in line with where the government is at 3%, ticked up 0.02. Where is that coming from? take a look through some of the categories here. Transportation, which the oil prices have been going up. That's down, 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 down. So it's mostly going to be transportation costs. Although I have seen where car prices, and maybe I'll cover something on that next time. But everything else seems to be either staying at zero or slightly down, except for transportation. So my final comments associated. Just wanted to take a look this week at some of the other things that play a role in as we start to look at all-time highs. So David Hunter had industries that were his expectation would go into the melt up are the semiconductors, the FANG stocks, the industrials, the airlines, the autos, commodities, the financials, small cap, tech, and some of these, like let's just take the semiconductor. We'll take their kind of ETF that they have, has already surpassed the all-time high. I mean, we're we're above it. So now whatever is beyond that is going to be gravy from a standpoint of, okay, we get the melt up. The number on the SMH is 250 in the melt up. Now that's that's way up here. This is David Hunter's forecast is 250. It was originally 400, but they did a split. So some of the numbers, if you go back to some of my previous videos, you'll see where it was 400, I believe, which would have been 200, but he's raised it since then. The FANG stocks, some of them have already hit the all-time highs. We look at Meta, has a ways to go. All right, it stands at 325, needs to get to 383, but it's well on its way. It's on a tear. Amazon has some work to do at 132, 188.55, all-time high. Apple has already hit its all-time high, its previous all-time high prior to this run that you can see. It's just right in this pattern here, this uptrend. Was 187.78, I believe. Okay, this number here. And so it's already got blown past it. Netflix has still got some work to do. 700. I don't know what anybody's expectation. Will it hit 700? Really? I don't know. We'll see how that one plays out. And then Google. Still has a little bit of work to do, but it's within 18 points of all-time high at just short of 152. So my expectation would be that it blow through there, so somebody will get excited about AI again, and that's about all it'll take to move it past there. Maybe a little resistance up around 141 here in this area. Might run into some resistance. Looks like it may have just filled this gap up here. So, it's filling gaps, making its way up, looking pretty strong. Expect some pullbacks. How much, who knows, but they always do, right? We had this. We get an up. Might continue up. Might get a pullback from where we are now. But you certainly don't. I'd like to see it run up just a little bit more before we get our next pullback, and then, it kind of landing in this 125, 126 area. Other areas, let's see, we talked about semis, the FANG stocks, maybe they're the MANG stocks now as a meta. Let's see here, we have industrials, the XLI, already new all-time high. Jets has some work to do. These are the airlines. So 34.89, we stand at 21.18. Now, I look at these personally, and I'm making recommendations, but as opportunities. So I'm kind of watching these. If David Hunter has talked about these being the ones that'll participate in the melt up, Um, you know, 13 points there. I'm looking for catch up, just like I am like with the IWM. It's got a ways to go here from 196, but it's made good progress. 196 to 244. That's still a mountain to climb, and then we've got some major resistance areas here I've marked out before you get there, which could run up here, pull back, and make another run up in here, and then pull back, or it could just go up, hit here and pull back, or it may blow by all those. But I think it's got a lot more issues first in order to make that climb, and it's in line with what I talked about earlier. We need to see a greater participation happening. What else? So we talked about airlines, autos. I didn't pull one up for that. Commodities. I mean, a lot of the commodities are. Did I pull one up? I thought maybe I did. No, I didn't. One is XME, maybe. Metals and mining, that might be one of them. 66. We stand at 52. That's reachable. Obviously, gold and silver and all those would play in those. What else do we have? Commodities. We have financials. XLF. I thought I put that on there. XLF. It stands at 35, all-time high. Looks like it stands at 42-ish. So it's not far away really either. Although again, we've had some weakness in the banks off and on, and again, some mountains to climb here, some resistance areas that we have. I don't know what that one is. Probably up in here around 40 also, and then obviously getting through the all-time high. But you can see that despite all of this, we have some of our all-time highs are either close to being reached. Some have a lot more work to do, but it's I feel like I'm getting to the top of the hill, and the interesting part is the melt-up part. So we get to these all-time highs, and for these industries I just mentioned, we expect another 40%, maybe more. Beyond that, 60% is David Hunter's forecast. It's fascinating to me, and it has me looking, down the road about, is this really what's happening, and why is it happening? Are great questions that I think that we all need to probably ask ourselves. He reveals parts of it. He'll say that he's, in his interviews, gives you everything you need, but there's obviously can't replace his years of experience. But I'm fascinated, and despite some of the things that happened last year with the war and everything, his forecast is intact, and I guarantee you it's going to get a lot more attention once a lot more of these industries that we just talked about hit their all-time highs, and start to go up from there. So anyway, that's what I wanted to cover this week, and remember, there's always a better way.